It is another monster quarter for another bank when it comes to equity trading. This is a huge number for Morgan Stanley. The estimate was at $4.78 billion. It comes in at $5.15 billion. Just to put it in context, they are just inches away from Goldman Sachs' equity trading business, which came in at $5.33 billion, which set a new high watermark for the entirety of Wall Street. So Morgan Stanley just behind them. When it comes to their FICC trading, also a beat, which again, Goldman Sachs was unable to do this time around. $3.36 billion is where they stand for FICC trading. The estimate was for just under $3 billion. Net interest income, that's a slight beat as well. And their investment bank, that also beating with the return of M&A in the first quarter. And then there's the crown jewel of Morgan Stanley, and that is their wealth management business. That net revenue also coming in at a beat, $8.5 billion. The estimate was for just over $8.4 billion. So clearly, there's still lots of appetite among high net worth individuals and wealth clients to invest in these volatile times. Just a few sore notes and maybe why you're not seeing shares up as much as others. Their compensation expenses were higher, $8.5 billion. That was higher than expected. The bank just noting that they had a lot of bonuses to pay out, and that led into those higher compensation expenses. The provisions for credit losses, this might get a few eyeballs. That's higher than expected. $98 million. The expectation was for $80 million. And again, their non-interest expenses, that also comes in a little bit higher. So higher credit provisions, higher expenses, but everything else, very strong beats, John.